Welcome to another video of my channel where you can expect to learn something new about the field of finance with every video that I post. When you are invested in a company, it is very important for you to track the quarterly or the yearly performance of the company on how the company has been performed. और हर बार जब ये अर्निंग्स न्यूज आप पढ़ते हो, रिजल्ट्स कैसा था इस बारे में लिखा होता है, तो एक चीज हमेशा मेंशन करते हैं कि whether the results was in line with the analyst expectation or whether the results were in line with the market consensus, whether they were better than it or worse than it. अगर ये इस बारे में नहीं पता तो वीडियो एंड तक देखिए, भले ही थोड़ा लंबा वीडियो चलेगा. So what exactly is the meaning of analyst consensus or market consensus, and what is its relevance? Why is it given so much importance? All these questions will be answered in the video. So let's get straight to it. What is market or analyst consensus? These two terms are interchangeably used, market consensus or analyst consensus. So a consensus estimate is nothing but a forecast of all public companies' projected earnings based on the combined estimates of all equity analysts that cover the stock. For example, I have been working as an equity research analyst since 2014, and just for example purpose, supposedly I am covering Coal India. There would be more such analysts like me who cover the same stock and would be providing the forecast for the earnings and would be providing the target price for the same share. So, supposedly, let's say there are 12 analysts who cover the same stock, and if you take the average or median of the forecast of these analysts for the sales figure for upcoming year, then that average or median becomes the consensus figure, and that is termed as market consensus or analyst consensus for sales figure of Coal India for upcoming year. Okay. Similarly, you can take the average or median of EBIT or profit numbers instead of sales figure, and that profit number becomes the analyst or market consensus for EBIT of Coal India. If you take the average of all these 12 analysts estimates for the upcoming year. Only the main KPI numbers like sales, EBIT, EPS are important and considered for consensus. Consensus number could be for upcoming quarter or for upcoming annual figure. Many aggregators like Bloomberg and Reuters compile the data from various analysts and provide the market analyst consensus number. Now let us talk about the relevance of the analyst or market consensus number. अब आप लोग बोलोगे कि इस सब रेलेवेंस, इसका रेलेवेंस क्या है मार्केट में, जबरदस्ती ज्ञान क्यों दिए जा रहे हैं? So let us understand the relevance on case to case basis. In three situations. Situation 1 we'll be discussing when the actual numbers reported are better than the consensus estimates. As you now know that the consensus number are forecasted number provided by various analysts for a particular quarter or a year. So if the actual results number are better than the analyst or market consensus, then there are good chances that the share price will move up. This is because the company's results are better than what market or analysts were expecting. In simple example terms, if the consensus number for company X for EBIT or profit for upcoming quarter was INR 100 million and the actual results came out with the profit of INR 110 million, then the news websites will publish that the profit beats the consensus by 10%, and it will be perceived as a very positive news for the stock. Additionally, if the quarter numbers are better than the consensus, then obviously the yearly forecast will also be updated by these analysts who are covering the stock based on the improved earnings of this quarter. Most likely or not, there would be increase in the profit and sales forecast in their model for the upcoming year also, which increases the target price also, because share price is nothing but the function of future earnings of the company. Now, let us consider situation 2, where the actual numbers that are reported are worse than the consensus. So, if the actual result numbers are worse than what analyst or market were expecting through the consensus, then there is a good chance that the share price will move down because the company's results are worse than what the market were actually expecting. In simple terms again, if the consensus number of company X for EBIT or profit for upcoming quarter was 100 million and actual results come out with a profit of 90 million only, then the news websites will publish that the profit misses the consensus by 10%. Additionally, if the quarterly numbers are worse than the consensus, then yearly forecasts will also be updated by these analysts who are covering the stock. And because the earnings of the quarter were not so good, more likely or not, they will decrease their sales and profit guidance for in the model for the upcoming years as well. So, so if the profit estimates or sales estimates are reduced, then the target price will also be reduced, because share price is nothing but the function of future earnings of the company. Now, situation 3, when the actual numbers reported are in line with the consensus estimate, तो इस इसमें कोई प्रॉब्लम नहीं होगी. Then you can perceive that the business is going on as usual or as expected by the market. For example, if the EBIT or the profit for upcoming quarter for the by the analyst consensus was 100 million, and the result also comes out to be 98 or 102 million, then you can say that the results are more or less in line with the consensus. And in an ideal situation, other things being equal, there would be no change in the target price, because things are perceived to be moving along in the direction in which analyst of the market has been perceiving. Now let us talk about the practical example whether you as a retail analyst can get access to the consensus number. Majorly, the consensus number are taken by equity research analysts from reputed and reliable sources like Bloomberg, Reuters, etc. That is, this data of average of all the forecasted figure for sales, EBIT, EPS, etc. is available on a reliable source, like is usually taken by the research analysts from Bloomberg, Reuters, which are the more reliable sources. But these data are available on some websites for free. Obviously, the consensus numbers quality relies on the people contributing to the consensus. But one such website is marketscreener.in. I'll share the link in the description for the snapshot that I'm going to show you guys. Have a look at this. Here is the consensus forecast for KPI numbers for Coal India as of 11th October 2022. This is a snapshot taken on 11th October 2022. Link will be provided in the description. You can check your forecasted numbers whether you are in line with the consensus, because more or less consensus number will give you an idea, because these research analyst guys are sitting, and this is a part of their work to forecast to an approximate or a very methodical manner. So you can more or less rely that the company's numbers, sales, EBIT, EPS are going to be in line going ahead with this consensus number. So have a look at this table. You can clearly see the sales figure, EBITDA figure, EBIT figure for 2022, which was the last reported year, and the forecasted year. It's marked in light blue color for 2023, 2024, 2025. So sales for last reported year was 1097 billion INR rupees, INR, and for forecasted year it is expected to be 1290 billion. Similarly for EPS, this is for Coal India. For EPS it was 28.2 for the last reported year, and it is expected to be 43.8 for the upcoming year. That is because of the rise in the coal prices. And you can have a look at the EBIT number also. It is also expected to increase. So this will give you a fair idea that the market expects earnings to improve drastically for Coal India as of 11th October 2022 for the upcoming years. So this would definitely give you a better view on whether you should be investing in this company or not. And this is available for free. Link is provided in the description. Similarly, here is, as I have already told you, that the consensus figure is not only for the financials of the company, but also they provide the consensus target price as well, which is more important. Here is the consensus target price, and this is also available for freely on the website. Link I have provided in the description. Here is the consensus target price and its progression for Coal India. We'll continue with the Coal India example. Have a look at the chart. Average consensus target price is currently at 244 rupees per share versus current price of 225 as on 11th October 2022. So इतना रिसर्च तो एटलीस्ट कर लो बिफोर यू डिसाइड टू इन्वेस्ट कि मार्केट क्या परसीव कर रहा है, टारगेट प्राइस कितना परसीव कर रहा है बाय द एनालिस्ट हु आर कवरिंग द स्टॉक, जो दिन रात इसी स्टॉक के पीछे लगे रहते हैं, रिसर्च करते रहते हैं। ये सब डेटा एटलीस्ट आप चेक कीजिए बिफोर यू डिसाइड टू इन्वेस्ट इन द कंपनी। एंड द लिंक टू the website I provided, you can check all the company's consensus, forecasted KPI numbers, or at least the target price. इतना research तो bare minimum कीजिए। Now some additional points on why the consensus number is perceived to be so important. I'll tell you some example. You can also think about the example that I am providing by pausing the video. For example purpose, let's say the last year's earning for Coal India was 100 million rupees, and this year's when the company announces this year's result, it comes to around 120 million for the sales figure. That is 20% increase. So anyone who is looking from outside might feel कि अरे ये तो 20% increase हुआ है sales, so it is going in the right direction. But what if I tell you that the consensus figure or estimate for this year was 140 million rather than the actual reported of 120? Then can you guess where the share price would go? Because 100 million was last year's, 120 million was something that they have reported this year, while the market was expecting that this year it should be at least 140 million. So obviously the share price might go down, because although the revenue has increased 20% this year, but market was expecting the company to perform way better than what the 20% implies. Okay, because all the target price that these analysts make in their models, DCF models, trading com models, is based on the estimate of 140 million. This is an ideal scenario that I am talking about. Let's take another example. Last year's reported earnings was 100 million, and this year's comes out to be 105 million. Now you can say that only 5% increase is there. But if, let's say, if the analyst consensus or the market consensus for this year's forecast for the sales was only 102 million, then you can clearly say that the company, although has a only 5% year-on-year increase for the sales figure, but has beaten the market expectation, and there could be a turnaround coming in the coming years. So that is why it is very important to not just track year-on-year performance of the company, but also whether it is beating the market expectation or the analyst consensus or the market consensus. Hopefully you guys found this video helpful to understand why the analyst consensus or the market consensus, whatever you might call it, why it is so important to have a look at before investing in a company, or at least have a look whether the company is beating the consensus or misses the consensus during the earnings forecast. I take various value-added courses as well. Don't forget to check out the link for the course in the description. You can contact me for the course on the contact number provided in the description. A lot of research was into making this video, so don't forget to like, share and subscribe.